Thank you. I got to tell you, first I walked in. You can hear me okay back there? Okay. When I first walked in, I saw Eric sitting in the back corner. I've been to his workshops, and my first thought was, super, as long as I don't go after him. This is going to be solid. And then I have to share with you a great comment my wife made this morning. It's a little embarrassing, but I have daughters, so it'll give you context. We're doing the morning thing at the kitchen island, making the lunches, and she knows my passion for veterans and my career in small business. You know, I give it some context. I started in this working with small businesses years ago, and I thought the holy land, so to speak, was corporate banking, right? 3M's, Pillsbury's, GE's. I thought, man, if I just put my head down and nail this and work my butt off, maybe someday I can be a corporate banker, right? That dream didn't shift years after I started. It didn't shift months after or even weeks. The very first meeting I went on with my mentor, who's long retired, was in this manufacturer in Blaine, and I sat in front of him and I watched Jim and the connection with this guy and the advisory role he had. And I thought, forget CFOs and CEOs and multi-billion-dollar companies. This is it. I'm going to retire doing this. So it's a pleasure to be here. And back to my wife, she says, going over, what are we going to do today? What do we do this week? When are you going to be home? Kids, blah, blah, blah. And she says, you're going to be a room full of veteran business owners? I said, yeah. She goes, you're going to be like a teenage girl at a Justin Bieber concert, aren't you? She goes, so take a breath, right? I get it. I'm taking a breath. So I hope today to make some connections between, there's a lot of parallels in contract preparation that there are for bank financing preparation, okay? Getting your company ready for funding is very similar, I'm sure, to the contracts that Tim talked about earlier and all the others did. And so hopefully we'll draw some of those parallels. We'll be really brief, really high level. I can get down a rabbit hole on these bullets and make you all wonder when we're getting out of here. So I'll hit it quick. We'll mix in some real examples of business owners I've worked with over the years and events we've helped them through. And then really would hope to hear from anybody that it sparks a question or idea after the fact, and I'd love to put you in touch with clearly one of our bankers or just talk about how that's going. So we'll talk about understanding how to create a business plan. And the very first line, we're departing from the script that says handout. We should edit that, and I'll remember it next time I have to talk to it. But the SBA.gov is a robust resource for business plan examples. We just stopped hanging out because there's so much better stuff out there. You can dial into specific to your industry. You know, it's not just high level 4-page, manufacturers only. You'd be shocked how specific you can get on examples. And if you're thinking you'd like a more specific one, you don't find out there, certainly get in touch with us as well. Understanding how bank products will or do fit into your business. It's not one size fits all. Any good banker is just not product slamming you. They're listening to what it is your challenge is, and they're trying to solve that, okay? Improve cash flow, is that what we all want to do, right? Annual checkup items to save money. Your banker shouldn't be complacent. You shouldn't get complacent about what products you're using with your bank. They change constantly, some by force from our friends in Washington and some other ways. Controlling finances, keeping your business valuable and marketable. So business plan, certainly appropriate for starting or buying a business, obviously, but I tell you what, I don't care if your business is 35 years old, you're the second or third generation, or you just started it last week or you're thinking of starting it. A business plan is always appropriate. We have a lot of our businesses that my bankers will sit down with annually, and they do a business plan constantly. Every year they do a business plan, and it's projections, it's people, they're dialing down. It's not just high level. We talked about some people go, they change, you lose an employee, this or that. They see it coming. The solid, long-standing businesses see what's coming, and they commit to it every year. And my bankers sit in front of them and go over that every year, see how we can be a part of it. Certainly financing or refinancing your business, if we're looking at providing funding or refunding some effort, we want to see what your plan is. We'll get into, so you got good credit, you've bought cars, you bought houses, that's great, but what's your plan for generating that revenue to repay the debt we're working to provide, okay? Raising debt or equity capital, kind of synonymous. So no bank products and their purpose. You know, we like to think of our bankers as, I always say, advisor, not order taker, right? You guys might call your banker and say, I need this, or I have a vendor I need to pay. They'll only take it through ACH. I don't even know what that is. Well, let's sit down and talk about it. More than half the time, that call ends up being something more appropriate, okay? Checking, online banking, bill pay, loans, lines of credit, credit card, merchant services, commercial real estate. Clearly, Deposit Express is, how many of you accept checks still from people you do business with? Okay, quite a few. So there's the efficiency of time. That check comes to your office. I don't care if it's a home office or a suite down the hall. Those checks, if you're putting them in a bag and driving to the bank, your time is valuable, right? You're running a business. People are depending on you. Getting in that car and driving to a bank teller every day is really, there's no purpose to it right now. There's a little scanner on your desk. You can shove those through and they're in your account the next day, okay? So little tools like that, time and efficiency. Little cost to it, pretty minuscule, but again, your time as an owner driving back and forth or someone in your office. Accounting software and financial statements. So I don't know how many of you have or realize the many accounting softwares out there that can integrate with the bank accounts and what's happening in the background electronically. A couple clicks of the mouse and you can reconcile your bank statements and your activity in and out of your account with your accounting software. They should be seamless. If you don't have something like that now, yes?
Are those like the quick?
It's a helpful tool for creating financial statements and whatnot. There's a lot of good info in there. QuickBooks would be more of what I'm talking about now. They integrate with our and most banks' software in the background, keep your accounting practices tight and efficient. But I'd still go back to SBA.gov for those resources. Improving cash flow, so managing accounts receivable. This is a conversation I have constantly when we're talking about improved cash flow and how could receivables improve cash flow, right? You'd be shocked how many business owners we sit in front of and don't know, we call it life cycle of cash. How quickly are you collecting these receivables? What terms do you have within there? They're just blindingly saying, you know, here's a bill, I did your website super, send me a check when you can, okay? And you know, there's systems in play there that to compress your receivables term time directly affects your cash flow, your business, okay? Why let it sit out there longer than you need to? So availability to accept credit cards. How many of you accept credit cards right now? Okay. So one thing is looking at your credit card vendor, whether it be us or anybody else, this gets into cash flow because many credit card processors out there take 3-4 days plus when your customer swipes that card before you have the money in your account, right? That's a lot of time that they remitted payment to you, that it's just sitting out there in no man's land. Someone's making interest on it, right? You should find a vendor that puts that money in your account the very next day. Oftentimes the cutoff is 10 p.m., 10:30 p.m. that card swipe. You wake up the next morning and jump on, the money's in your account. So if you look at the volume over a year, that's going to affect your cash flow pretty positively. Grow profitability, not just grow. Again, a lot of conversations where it's usually the younger, super ambitious, hot to trot, starting up a business, just wanting to be $10 million or $20 million or $30 million, instead of saying, listen, let's talk about profitability. Top line sales doesn't necessarily equate success. How can you be most efficient? You might make a heck of a lot more money and impact a lot more people's lives at 1.5 million or 600,000. So it's too often the business owners I've met with just get wrapped up in growth. You know, what can you do within the model you have right now? And lease equipment versus purchase. This is, I've had CPAs over the years that don't understand this tell their business owners I'm lying. And then it's fun to prove that that's not the case. But it's a conversation you should have with your accountant where you lease a piece of equipment. There's ways that you can mitigate your tax liability rather than going and buying it, either paying cash or getting a simple interest term loan. Again, this is a rabbit hole I can get down to, but consider if you have equipment needs, and it's not just punch press for a machine shop, or I'm talking about computers, laptops, screens, desks, furniture, chairs, anything that a small business needs that you can put your hand on and it's a thing, right? You can, well, I take that back, software even. Software you can't really put your hand on, but we can lease software, okay? Big software packages. Annual checkup with your banker. So this is, Eric was talking about the follow-up and follow-up and follow-up. If you don't have, I'm sure you can all name who your bank is, right? But can you name who your banker is? Do you have that person that's fighting for you when you have opportunities or challenges coming up? On our team, I have a report where if that banker hasn't talked to their business owner in more than 90 days, we're sitting down every week and going, who's on that list? Who have you failed to contact? Who do you not understand the way you should right now? And example, merchant pricing, the credit card costs, those are constantly changing. It's changing in the background. The cost to run that money is changing. You should be looking at it every year minimum, having it reviewed. Not saying switching providers, but have it reviewed, have it looked at. That's real, actual dollars in your pocket with just a quick snap of the fingers. Refinance your current debt. Clearly, I think, unless you live in a cave, you understand it's the cheapest time to borrow money ever, right? My parents remind me all the time when they bought their first house, prime was 19% or something. So doing ARMs at 13% kind of makes my head explode. But always just don't assume because it's sitting on your balance sheet and you're making that payment that it's in a good place, that it's where it should be, okay? Bundling your bank products. I know we've had some business owners over the years that I don't like having everything at one place. It makes me nervous, especially, can't blame them if you were around during 2008, 2009, right? I slept pretty well, but others didn't. There's efficiency in cost. There's efficiency in moving your money. So, the whole flow of cash through your business can have real dollar impact to your bottom line if you've got these things connected correctly. So control your finances. Payroll makes me think of some fraud measures. I'll give you an example. We had a business in St. Paul who switched payroll providers, say ADP to Paychex. I don't remember who it was. But we've got these algorithms in the back that see all those checks come through, right? And they switched providers. My assistant came in Friday morning and saw all the payroll was being held. It wasn't being released. But it's early. It's in the background. We called down and find out because they'd switched providers, the size and color of the checks were different. And we said, hang on a second. Call and make sure this isn't fraud. That something funky's going on. And we called the owner and said, is there something going on with your payroll? Oh, we switched providers a few weeks ago. Or 2 pay periods ago. They're good, go ahead and send them through. And they just, holy smokes, the size and color of the check is different? I said, yeah, these things are out there. These things are out there to protect you and protect the money you're running through there. Trust but verify fraud measures. This same company, the owner, his CFO retired. It's a medical products company in St. Paul. CFO retired, bookkeeper, really controller, and he replaced her. And I said, boy, you got the finger on the pulse of your business every day. Freedom to write checks, freedom to look at your accounts, has sign-in authorization. You know her, everything's good. He's focused on his business, not thinking about this. About 6 months later, he calls with his hair on fire because she had been writing checks, coding it to vendors in QuickBooks for $300-400 and writing them to herself. But if you look in the accounting software, it said the vendor's name, right? So there's ways to control that too, called positive pay. A lot of banks have it, where you can have, so if you have someone that writes checks for you, pays bills for you, it doesn't go through until you open it up and say, yep, that one's good, and then you send it, okay? So you could sit on your computer at night before you're going to bed and say, yep, those look good, we'll send them through, okay? Now he came to my office and I Googled her name and saw he was a little embarrassed about that because I literally typed her name into Google and went, huh, well, she's got some convictions for fraud and theft by check. What? Google's a pretty amazing thing, right? It's controlled that purchase of latest gadgets. This comes up a lot too, where we get, again, back to the trying to be, your banker should be an advisor, not an order taker. You should be okay with, you should feel comfortable if you call and say, I'm buying this big, fancy, crazy, bright light gadget, and they kind of stop and try to enter a conversation with you. It's don't get hypnotized by the latest and greatest. It might not be the best fit, and you should have a CPA or a banker or somebody that's talking about, is that really what you need to do? Does it add value to your business? Does it add value to those who work for you, to your vendors? Hold regular interviews with your CPA and banker. Like I said, we like to think of ourselves, and if you can't say who your banker is, we like to think that the CPA, the banker, the attorney are ones that we talk with regularly, that you should rely upon. Most small businesses don't have, an advisory board or board of directors. You shouldn't. That's not the idea of small business, right? Your CPA, your banker, and your attorney should be your advisory board. And you shouldn't shy away from the questions they ask you. They're getting to know you on paper. They're doing right. They're making sure they're doing right by you, okay? Take emotion out of running the business. I know it's hard. It's kind of like buying a house, right? How do you not get emotional? Man, we just went through a massive renovation, so that was emotional. Those granite countertops were pretty sweet. Had a swimming pool. We get a lot of the calls where it's just emotion driven, and again, that advisory team should be the one that kind of helps you bring you back to earth, right? Let's see. So making your business valuable, and this speaks a lot to if you're preparing to sell your business, bring an investor in, whatnot. So clean financial statements. That's if you're preparing to borrow capital, if you're preparing to sell, to bring in a partner, everything kind of stops if your financial statements aren't clean. Okay, if someone calls us and they're looking for any of those things I mentioned, and they send a balance sheet that they whipped up on Excel, and there's like checking account and a car loan, they don't really know what's happening within the financial statements of their business. Strong customer base and reputation, This whole topic today, when we're talking about the seminar and getting contracts, if you're looking to sell your business, bring an investor in, any of those things, contract agreements with your vendors or with your customers are huge. They're huge when we're trying to provide funding to you. And you'd be shocked how many would enter into a contract with you that are just casually doing the handshake business, right? So we often ask the question, are you under agreement? No, I've worked with them for 13 years. We golfed on Saturday, went to their kid's wedding. That's fantastic, but would they be willing to enter into a contractual agreement with you? And by and large, more often than you would think they will. And it can be simple, and I'm sure Tim would take that call, right? Uptake technology to tie relationships with these clients. We call them sticky products in banking, where show you behind the curtain a little bit, but if you can establish a technological connection with your customers that make it more difficult to leave you, that's a sticky product, right? How you're collecting or remitting payments between the two of you, it's a sticky product. The technology's out there to create that. So don't take for granted how you've done business with them over the years. Try to make it a total pain in the butt to stop doing business with you. And frankly, we try to do the same thing. Well, if they have, again, we don't product pound them, but if they're appropriate, and I look at a relationship with owners like yourselves, and one of the things we're most proud of is low attrition in this market, extraordinarily low attrition. And it's because of the model of being in front of you all the time that I've talked about. But sticky products, it's knowing that the efficiencies and technologies and, like that little engine humming in the background, right? That every business would like to know is there. If that's humming in the background, it's humming pretty smooth, why would you go anywhere? The more you can do that with your customers, the better. So, there's 1,000 different reasons a business would obtain financing or funding, right? Starting it up, young and growing or mature. But what remains constant, no matter what stage you're in, is your preparation of a business owner to obtain that. I'm having virtually the same conversation with someone who's starting something up that's been in business for 30 years. All the things we look at in the preparation is the same. Business plan, right? So, and that starts with your personal credit score, okay? It's undeniable that the best indication of a business's ability to repay to a bank starts with your personal credit score. You're the one that's putting ink to paper. How you run your home is often parallel to how you run your business, right? So we have some say, look at, we're bailing money, right? My credit score is 510. We're bailing money. I get it, but there's kind of an indication there that you're not sure what you're doing with those bales of money. Personal liquidity, cash or securities, investments that do not contain a penalty for removal of funds. So what we mean by that is obviously 401ks, IRAs, things like that, that you might have a nest egg out there. Probably not appropriate. Revenue trends, projections when you're looking to obtain capital. Again, business plan, what are you going to do? And it couldn't possibly be too specific. The accounting softwares out there can be a good basis for that, but really thinking about the payroll, investment in technology, what's that going to equate in top line revenue and expenses. Global cash flow, something a bank looks at and you realize it's back to the FICO score. We look at your personal situation as much as your business, right? So if we say, I think that's on the next page, I'm not going to go down the rabbit hole on this calculation, but at the end of the day, a small business is looked at with your cost to operate the business and the cost to operate your home. And those all come down to one net factor. So we share this with you just to give you an indication of what a bank would like to see. We'd like to see for every dollar of debt, you've got at least $1.15, $1.25 of revenue on a global basis, again, which means your business, your personal. If you've got a spouse that has outside W-2 wage on top of your business, that contributes to the global calculation, okay? SBA is obviously an appropriate source of funding, particularly for veterans right now, in the fact that, keep going here, the fee reduction is significant for you, okay? Now I was around mid-2000s, 2007, 8, they kind of did away with the minority-owned business, woman-owned business, veteran-owned business, specific programs. Reason being, they didn't board them up. Someone smartly decided these should be available for everybody, frankly, okay? So the programs are still there, just by a different name. What you do get, though, is significantly reduced cost to entry. So cost to obtain the funding is greatly reduced as a veteran. So to start something up, even expand, frankly, too, through SBA, you're looking at a down payment of 25 to 30%. Now that funding can come from, that just means your injection. It can be home equity, rich uncle, whatever, but the total contribution needs to be 25 to 30%. Experiencing the industry, it's kind of hard if you're a librarian and you want to open a restaurant and you want 100% funding. It's not going to be there. But if you've got applicable industry experience, a lot of times, all the Fortune 100, Fortune 500 companies in town, I've met a lot of division leaders or managers over the years that said, I can do this better, I can do this smarter, I can do this faster, and they leave. Love it. That's fantastic. We're all over that. And SBA is a big part of that too. Projections we've talked about, outside income helpful, that's to say, if you have a spouse that would be willing to help guarantee funding that you're looking for, maybe has outside W-2 wage, stable job, that goes to that global calculation, okay? So it can help bolster maybe a flat or struggling bottom line by showing that the resources within the home can repay that debt. Franchise, SBA loves franchises. They're kind of the turnkey. It's got the model, the definition, the rules of the road, so to speak, and they're quite predictable. Oftentimes the risk is very low. They're easily changed hands within that franchise model as well. We have a lot of like the Papa Murphy's and the McDonald's. We're one of the 3 banks in the country that fund McDonald's. And oftentimes once that franchise opens, if they don't want to do it anymore, someone else will come in and get it. So home equity we talked about, local consortium. How many of you even know or have worked with AMITA or one of the local organizations for seed funding? It's a phenomenal source. If you haven't and you want more on that, I look forward to hearing you. We have a couple of the people on my team serve on the board at AMITA, do loan committee reviews. It's organizations we're heavily involved in the Twin Cities. So what those can do is help close that gap. You saw that 25 to 30% downstroke for some requests. These organizations can come in and be a part of that, okay? So if we kind of piecemeal the home equity, META funds, some of your own, and we'll get there, okay? Friend or relative, there's a rich uncle, right? I wish they'd delete credit card. I know it's on here. That's where I put it, but seriously, if you're sitting in our office and you know, well, I got $25,000 available on my Visa. Let's look at something else. Crowdfunding, I just feel old when I see that because I don't even honestly know. I have to play ignorant on that. It feels like a gen. What's the gen now? The gen millennials. Thank you. I should be better at that. It's kind of a millennial thing. I've got a bunch of people in the office. If someone called and wanted to talk about crowdfunding, I'd be calling them down the hall. I don't know what that is. Never been a better time. I talked about that. The cost to borrow right now is just ridiculously low. I know I was talking to one of you earlier in the back about the building you're in is in receivership and maybe an opportunity to buy it. Boy, and he said to me, I know that, could that make sense? I said, you'd be hard pressed to figure out a way to not make it make sense. Okay, if you're paying rent and you have an opportunity to get a steal on that square footage you're paying rent on and play the, I hate to say it, but tax game, right? Mitigating your income tax through what you're paying yourself for rent, it'd be hard pressed to not make sense for you. Basic financial need, one-page apps as high as $500,000. That means there's credit capabilities. You don't have to get too onerous in your application package, so to speak. Most of that's asset-based, equipment, manufacturing, things like that. Structure and maturity depends on the collateral type of business. Collateral being real estate, again, hardware, stuff you can put your hands on. What's the depreciable life of it? How long is it good for? So if you want, you know, $200,000 for a software package and you want it for 20 years, it doesn't really make sense, does it? Real estate, certainly. So think about the asset you want to acquire or the investment you want to make. How long is it really going to be around? You know, there's Heidelberg printing presses last for forever. We'll probably go pretty far on those, but not much else other than real estate. Best to prep ahead and understand the best solution for you. We've talked about getting my team or your banker, wherever they are, sitting in front. It's never too early to have a conversation, ever. Maintain a team of industry experts. I talked about that. I think if you took one thing out of that is if you don't know your banker's name, find it out or call me and I'd love to give you one, okay? Same with CPAs and attorneys. The best CPAs and attorney relationships we have are the same thing. We talk all the time about you, and that's what you should have. If you don't have it, you need it. We're having conversations all the time about you, for you, when you don't realize it, okay? And that's the way it should be. So that's it. Craig would have been here. He's the head of business banking for the three state area, and he got a few more responsibilities than that. He used to run the Twin Cities. Now he's got Greater Milwaukee, Cincinnati. So he's got a couple things that got added to his plate recently. So if you want to send him an email and let him know I should get a raise, and have at it, it's in the packet. Otherwise, it was my pleasure to be here. I look forward to connecting with some of you afterwards.